Welcome back, guys, to the third and the last part of the swing trading course. Now it's time to actually go into the exciting stuff here. Here I'm going to show you some examples of swing trading setups, and before we begin, it's important to note here that I'm not doing this to give you a ready trading system or a proven profitable trading system. I'm only showing you examples of swing trading setups so that you will get a better understanding of what swing trading is and what it actually looks like in practice. As you can see here, we have three different sections of this course where I'm first going to show you some trend trading examples, and then we'll talk about range trading, and finally mean reversal strategies. All right, let's jump into the first part here, and I'm going to show you some examples of trend trading strategies. So what is trend trading? Well, let me give you a hint. You're going to be trading a trend. It's very simple. But okay, so I'm not going to go into great detail on, how to identify a trend or do market structure analysis in this course, but let's just keep it very, very simple. In an uptrend, all you really have to care about is you need to find higher highs and higher lows, okay? This is an uptrend. This is basically what you're going to be looking at. A downtrend, lower lows and lower highs, okay? That's what a trend looks like. Now, of course, it's not going to look this picture perfect, but that's basically what you are looking at when trading a trend. Now, let's jump into trading view here, and I'm going to show you some examples of what I'm talking about. So here we have Euro USD, and I want to show you an example of how you could be trading a swing trade here. And this is actually quite a good example because here you have a high time frame confluence and like on the very high time frame, and then we have also a breakout structure on the lower time frame. It's a beautiful example of a swing trade using multi-time frame analysis. So I'm just going to go out to the weekly, and what we're first going to do is we're going to use the replay function right here. So around this time, but we are looking at this market here on the weekly for USD JPY, and yes, we see that if you look at this as the local trend with a high, a low, a higher high, higher low, and a higher high, yeah, this is what when you move down here, yeah, you kind of broke in the trend. But if you zoom out, you can see that, wait a minute, it did actually hit, almost hit a level around this area right here, and it's in a good area to perhaps bounce here. So the overall trend, I would say, here is actually quite strong. I mean, it's coming down and it's testing historic levels right here. So I would say from a swing trading perspective, I'm not sure that I want to be buying at this very moment right here, but I definitely want to look for signs to get into a swing trade, because looking at the high time frames, I would say that soon, within maybe a couple of days or a couple of weeks, we could be bouncing, somewhere around this very, very historic area right here. I mean, this level has been used as resistance since all the way since 2002. So now that we know that we, want to be buying around these levels, let's go into the daily to see if we can find anything interesting here. So on the daily, we actually have an important note here is, price action is fractal. So you will be able to see a trend on the weekly, and within that trend on the weekly, you will see uptrends and downtrends within that. And then you zoom in and you're going to see, like, within a weekly candle, there's going to be lots of different trends and ranges on the lower time frames. So it's important to take this into consideration. But when swing trading, you're looking at the higher time frames, and then you're going lower and lower, but usually not lower than like the 1 hour. So here what we have on USD JPY is, so we know that we want to be buying around these levels based on the weekly, and we just want some confirmation on the daily or maybe the 4 hours, something like that. So what I like to do is I like to look for break of structure, and we can add trend lines here to show you how we have a pretty decent downtrend here, with actually a very clear downtrend with lower highs and lower lows. Now, what happens here is interesting, because now what we get right here is a higher low. It's the first time we're actually getting a higher low within this trend, and also a higher high. So we're getting the higher low and a higher high. And look what happens here. This level here is being used as resistance. We're now breaking that level to the upside, creating a higher high after a higher low, and then we're bouncing right here on that level. Imagine that you're seeing this. So, well, actually, imagine that you're trading here. You had the weekly bias, you want to be going long, you're looking at this, and you're going to put in an alert right here on TradingView, because when that alert goes off, and you might write something in the alert, like perhaps, you know, we can do something like this, we can add an alert. Well, we can't add alerts in replay, but let's say this is an alert and we're going to say, look for longs. Okay, so the alert goes off, and the alert goes off right here. And now it's time to look for longs. So this is now on the daily. We looked at the weekly, we created a bias on the weekly, and you know, we're now looking at the daily, and we have a breakup structure on the daily. Now what we're going to do is we're going to go into the 4 hour, because maybe we'll find an entry on the 4 hour. So here we have a level, a horizontal level that kind of goes something like this. You can see how I've connected these lows here, and I'm going to be connecting these candle closes right here, and there's a pretty, you know, it's a good level right here. It aligns quite nicely with the daily here as well. It kind of aligns with the weekly as well. You can kind of draw it all the way back here. You can add a horizontal here, and you see it aligns quite nicely with the weekly. With the daily aligns with the 4 hour, and you now have that high time frame bias on the weekly, and you say, you know what, this is the level that I want to be buying, and I'm looking for targets all the way up here, right? I'm looking for USD JPY to really continue this massive run to the upside. Maybe you have fundamental reasons to believe that USD is going to become much stronger than JPY in the future from this level, or maybe you're trading purely on technicals. But let's say this is the level where you want to take profit. You're expecting price to move all the way up here. And how long should that take? Well, if we calculate how long this move took up here, we could say it took on a weekly basis 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So obviously a long-term trade, 10 weeks, very long. So this is definitely a swing trade and a swing trade plan. Now, from a technical point of view, what would be the entry and exits? Let's say we want to just put there's going to be a lot of different ways to trade this. Either you wait for this level to get hit, and when you have confirmation of the level getting hit, then you have a bullish reaction that might look something like this. You might come down here, and then you have a bounce, and when you get that bounce, that's when you enter the market. But let's assume that your entry point is going to be somewhere around this area. You want to have the stop loss below this level. It's going to be a very wide stop loss right here, somewhere around that area. But the risk to reward on a trade like this is very high, and the risk to reward on swing trade can be very high, especially when you combine high time frame analysis with low time frame analysis, and you do the entry on the lower time frames. Now let's see how the market reacts to this level. So you see, you come down here and you fill your entry, and then it starts moving higher. That's how you can find entries on the 4 hour on that breakup structure. It's a very clear trend trade here with the swing trading target. Now, the thing with trend trading is it's going to look basically the same on the weekly and the daily as they look on like the 5 minute and the 1 minute, because price action is fractal, so they're going to look very, very similar. Let me show you another way you could have traded this setup. So let's say we add a trend line on that low to that low. So let's say that you're waiting for like weekly confirmation of this. So when that candle breaks above the level, that's when this whole trend is confirmed, and you're only going to be trading this based on the daily. So you want to see a retest of the lower areas once again before entering. Let's see what we get here on the daily. So now on the daily, you see price is coming down. It's hitting that support area once again, and it's perfectly hitting that trend line. Now look at that, absolutely beautiful right there. At the time of hitting that trend line and the support area, you might want to go down to the 4 hour and look for confirmation. And I would say that right here you have beautiful confirmation with a 4 hour bullish pin bar, and then an engulfing candle. This could be an insanely high risk to reward trade where you enter based on this, and then that's going to be your TP all the way up here. Now obviously this is a 15-hour trade. You're not going to get trades like this every day, but let's see how this actually plays out. but that's the actual low. And then you see price slowly but surely making its way up to that profit target. So how long did it take from that entry? It took, well, much longer than anticipated. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15, so about 20 weeks. All right, but you know, a 15-hour trades in 20 weeks can be obviously quite worth it. And as you can see, you could have gotten in on this trade at a later stage as well. So you could have exited this, you know, enter here, exit here, enter here, exit here, something like that. So there's lots of different ways to trade trends and to basically swing trade. But I think an approach like this is what I think is a very good approach, where you're using the weekly and the daily to look for levels and look for confirmation on those time frames, and then you go into the 4 hour, maybe the 1 hour, to look for an entry. And the thing is, when you're using a 4 hour as your entry time frame, the stop loss, sure, this is not a very wide stop loss, still like above around 12. So usually when I'm swing trading, I'm looking for stop losses that are maybe around 20 pips, but it all depends on the setup. But what you want to focus on, you want to make sure that you get a comfortable entry, and then you want to kind of let the trade mature on the higher time frames. You want to let that trade develop good price action on the higher time frames, and you want to kind of like be very patient with that and kind of like forget about the trade. And for that to be possible, you want to make sure that you don't have a super tight entry, because if you have a super tight entry with a super tight stop loss, price will just fluctuate within that 4 hour, within that daily candle, and maybe just take you out of that position. So when swing trading, you want to make sure you have wide stop losses to make sure you don't get pushed out of that trade before hitting TP. All right, so now that I've showed you an example of a trend trade, now let's talk about range trading. So if a trend is higher highs and higher lows and lower highs, then a range is basically equal highs and equal lows, where you don't have higher highs and you don't have higher lows. You have equal highs and equal lows, like that. Let's go into TradingView and take a look at a few examples of how you could be trading these ranges from a swing trading perspective. All right, so here we have Euro USD, and we got current price right here on at the time of recording this video on the 3rd of April, and then we have this whole range. Obviously, there's different ways of identifying a range, but I'm just going to be adding some horizontal levels here and talk about this overall range. So I got a pretty good level right here. I like that one. And then what I see is a level going through this area right here. Let's use those highs. So here we can see price is kind of ranging between this resistance area and this support area. Yeah, you have a move above this resistance, but then it comes down into range again. You have a couple of moves below support, but most of the touches of this support area are bounces on support, and you see resistance being used as resistance with these rejections right here. So how do you actually trade these ranges? Now, there are, of course, many different ways of trading a range, but one thing that I really like to do is to apply sort of a break and retest approach with somewhat of a local trend, but then incorporating the levels of the range. So if this is a range on Euro USD, could view this as a trend, and this is a very clear break and retest, where the retest does not only happen on the breakout level but also the previous range lows. And at the time of hitting these previous range lows, we might want to look at a bullish engulfing candle on the daily right here, or just a high time frame reaction to this level. So right here you have that bullish candle right here. It looks like a bullish engulfing candle. We might want to enter on the close of that candle with stops below the bounce, below the wicks, and then take profits at the range highs, and that also aligns with this local high right here. So a very simple trade where you're basically combining a few different things here, but all in all, you're looking at this range and you're thinking price is most likely, you know, we're back in this range again, and price is most likely going to keep on ranging here for as long as possible before breaking the range highs or the range lows. And you can see here that Euro USD entered this range on January 2023, so over 1 year ago. So it's been in this range for quite some time. So you could actually, with fairly high conviction, say that these levels will be acting as support and resistance. Now, another thing I like to do when adding ranges is using the fib tool. And within the fib tool, I have a range template. And if I add it right here, you will see what this all does. I'm going to change the color to black to make sure it fits this white background. So basically what I have is I have the 1, the 0.5 and the 0 here that kind of shows the lines very nicely here. So I got one right here. I'm going to put that in the middle of that horizontal, and then the other one in the middle of that upper horizontal. And when you get right here is what I'd like to call the range EQ, or the middle of the range basically, and you can add a horizontal level right here. Basically what you want to be doing here is you want to be either taking a long trade from support all the way up to the range highs, a so-called full range resolution trade, or you want to be trading from support to range EQ, or from resistance to range EQ, or from the range EQ from here down here or up here. So there's a lot of different ways where you can be trading, or lots of different ways in how you could be trading a range. And it doesn't really matter if you're on the 1 minute or the weekly, you're still going to be finding ranges like this. But when swing trading, it's important that the range you are looking at is visible on the weekly and or the daily. So you can see here on the weekly that we have these levels being respected on the weekly as well for Euro USD. This is a good example of what is not a range. Euro USD is absolutely not in the range right here. This is where you want to be applying a trend following swing trading strategy. And then you have all the way back down here in 2015, you have a decent ranging structure right here. So it's all about looking at the market structure and deciding, are you going to be trading this from a trend trading perspective or a range trading perspective, and then make sure that the range is visible on the weekly and the daily time frame when you're trading this range from a swing trading perspective. And also important when it comes to trading from a swing trading perspective is you're looking at the higher time frames, and you want to make sure that you get confirmation on the higher time frames as well. I want to show you another beautiful example within this range right here. So let's assume you're trading here, okay? So you got this range marked out. Now, obviously, you don't really know that this is a range at this time. And the truth of the matter is, when a range is obvious, that's actually usually the time when it's time to break out of that range. But looking at this price structure right here, I quite like what I'm seeing right here. So you see price coming down into support level, and yeah, you see equal lows, you have support level right here, you get equal high area. You could see that, you know, yeah, this definitely looks like it could be the beginning of a range. And even if it's not the beginning of the range, it's a pretty good support level to be buying. So here you have a beautiful example. So you want to be trading this bounce up to the highs of this possible future range. What do you get on the next candle? A bullish engulfing candle on the daily. Enter on that bullish engulfing candle, close on the daily, stops below the wicks of the previous candles, and then TP at what you believe would be the highs of this range. A quick, well, not a quick, but this is a 2-hour trade. Now, of course, you can go into the 4-hour and you can look at like a break and retest on the 4-hour on the lower time frames, and you see you get something right here, a reaction down here. And then when you start moving higher, this is where you might want to start looking for a trade. Maybe you look at that bullish engulfing on the 4-hour as confirmation that this becomes a 4-hour trade. So there's a lot of different ways to range trade. And again, I'm not showing you these examples to give you a profitable trading system. I just want to show you examples of what swing trading looks like inside a range on the higher time frames. All right, so now let's finally talk about mean reversion in trading and specifically in swing trading. Now, mean reversion is the idea that price tend to return to a central or average price level over time. So imagine that you're taking a rubber band and you're stretching it far away. Now, eventually it wants to snap back to that original position. And in the world of trading, this concept suggests that if an asset moves too far away from its average price, it's likely to return closer to that average sometime in the future. So for example, imagine that an asset that you are trading is trading within a range or within a channel. Then all of a sudden you see price jump out of that channel or out of that range. At that point, you could argue that chances are that price will eventually make its way back into that range closer towards the average price. And the mean reversion traders, they look for these extreme deviations to make their trades. Usually they want to go long when prices are very low, and they want to short when prices are unusually high, expecting them to return to the average or the mean price. Now, this is a very simplistic way of looking at it, and there's a lot of different ways of trading as a mean reversion trader, and I'm going to show you some examples on here for how a swing trader would be trading these techniques. Let's go back to Euro USD here and take a look at this range here. So this is a range on the on the weekly time frame, and I'm going to show you like how to mark out the range here. Now, we talked about this in range trading, but I want to mark out what I believe looks like a pretty decent range here, where we probably had the range highs and lows here. Let's change the color here again so it's black, so you can actually see what we're doing. Here you have somewhat of a range, right? Now, we have something in TradingView called a volume profile, the fixed range volume profile. So I can select that one, and then I'm going to select the very high of that wick here, and then the overall very low of this range right here. And this will show me visually, these bars basically show me where most of the volume has been traded within this range, and this red line is the point of control. It's basically where most volume has been traded, and you can see that the point of control is very close to the range EQ, and this also gives me some confirmation that the levels that I've selected for this range is somewhat correct. So now I'm going to remove the visible range, and I'm also only going to have the range on here, and we're going to use the replay function here to make sure we don't get lost in the chart here when switching time frames. And I'm going to go into the daily time frame. So here we have a range that was visible on the weekly, and when I talk about these different techniques, I've showed you swing trading in terms of trend trading, range trading, and now mean reversion. It's all about different time frames. The idea of price action being fractal is very important to understand here, because what I'm showing you here on the weekly and the daily, you'll be able to find that on the 4 hour, 1 hour, even the 1 minute time frame. It's all about your perspective when it comes to your time horizon, your perspective as a swing trader. So there's not really a lot of differences in the different trading styles. It's more about perspective, but we've already talked about this. We now have range highs and range lows. We know that the point of control of this range is somewhere around this area. So where is the extremes? Where's the deviations from the mean? So if we look at this as the middle of the range EQ, that's where most of prices have been traded. Okay, so we have 3 levels here. We have the range high right here, the range EQ, and then we have the range lows, which is right here. Now, when trading a range from a mean reversion perspective, you could either be trading, if price breaks the range low to the downside here. So whenever price breaks below the range lows right here, you might want to be either going long when you have some sort of buy signal down here, and that buy signal would be obviously depending on the system that you're trading or the entry triggers that you have, but it could be something like you're watching the daily right here. So you might want to look for a range on the weekly and the daily, and then you break down. You might be breaking down on a daily basis, daily perspective, which means maybe a daily close below right here. You have a daily candle closing below the range, or maybe you wait for a daily open and close to make sure it's not a fake out. And then on the actual entry trigger, you can zoom in on the 4 hour. And let's see if we can get to the same place. You can zoom in on the 4 hour and you wait for simply just a 4 hour bullish engulfing candle. Doing maybe on the 4 hour bullish engulfing, stops down here for move up here. Now obviously you would be stopped at, but then you have another opportunity to enter perhaps a trade that would look something like this, with a maybe a buy when you get above that bearish candle on the 4 hour, stops below the wicks here, and then TP at the breakdown level or the range lows. You could also, you know, trade this all the way up to the actual mean, the average price, and that would be the range EQ. This right here is a 10R trade, very profitable trade. Now, is it gonna hit that level? Let's go back and look at the daily time frame. Well, on this move, it doesn't hit that level, so I guess on this move you could have been taking profits earlier, but on this one right here you actually have a very good opportunity, because now you have another move to the downside, you have an extreme, and now you actually have a bullish engulfing on the daily. So this could just be a trade based purely on the daily for a move up to that mean, which would be a 3.4R trade. Still pretty good, right? And we can go into the 4 hour and we can look at this as an entry on perhaps the 4 hour, and here you can see that you have on this very low right here a good looking nice 4 hour bullish engulfing candle, stops below the wick, and then all the way up to the mean here would be, you know, up to the low 3.4, 3.3, and all the way up here an 8.5R trades. So very high risk to reward trades. And usually when you, from my personal experience, when it comes to mean reversion, the win rate is usually lower, but the risk to reward can be very high, because you're trading the extremes move, and usually it's very strong moves to the upside, and you're looking to short that down to the mean, and so usually the risk to reward is can be very high. So that's just a quick example of how you can trade sort of a mean reversion strategy from a swing trading perspective. Again, it's very important to remember that from a swing trading perspective, it's all about your time horizon and your planned time horizon for the time frame of the trade. And then again, you can combine day trading with swing trading, where you're throughout the day actively looking for entries on the lower time frames. And actually, I want to show you a trade that I currently have open on NCD USD. So I want to quickly go over to that one, and well, actually it's this one, EURCHF. So I entered this one this morning, and you can see here that basically it's not really a mean reversion strategy that I'm trading here, but you can kind of look at this in a similar way, where you have, imagine that you're watching the higher time frames here. Okay, imagine that now this is on the 5 minute, right? But imagine that you're watching the daily or the weekly, and you have this range right here. Now obviously this range and this move, if this is the average price, this move here is very extreme. Price comes up, rejects here, and I decided to go short on that bearish engulfing candle, and I'm looking to take this trade down to the previous range highs, where it's closer to the average price, closer to the mean price. So that's just an example of, this is not a swing trade, but just to show you the idea of price action being fractal. And my time horizon for this is to exit this trade in this day, but obviously if you're looking at the weekly or the daily time frame, you're looking to exit that swing trade in a couple of days or even a couple of weeks. Just in the same way as you have a range, you can also have a channel, and it's pretty much the same thing. Well, not really. A range has equal highs and equal lows. It's not really the same thing, but it's the same principle. A range is a sideways price action market, and a channel is a trending market basically. But what you have here is you have just the same as in a range and a channel. You have a upper boundary, a lower boundary, and a middle zone, or an equilibrium zone of this channel. As you can see here that you have basically resistance of the channel, support of the channel, the lower and the higher boundaries, as well as the middle zone. This is basically just the middle of the high and low. You can see here now, of course, this is not perfect. This is not perfect. I've just selected something that I think looks good for this example on a daily. Again, this whole course is not to give you a profitable system. It's just to explain what swing trading is by showing you some examples of trades. So again, using the idea of mean reversion, imagine that you have that rubber band. So down here, you're holding that rubber band and you're extending it all the way up here, and then you release it and it snaps. Boom, just like that. Same principle here. So when price starts to form this channel right here, you can kind of see how it goes up. Now, of course, at this point and this point, this channel is not very clear. So if you would be looking at this at the time of forming the structure, this channel would not be clear. It's more clear up here, right? As an example. But imagine that you have alerts. You have alerts above this level, and the alert goes off here, and now you're going to be looking at a possible trade to take this trade down to either the upper part of the range or the high risk reward trades. You want to see a move down to the middle of this channel. So yeah, you're getting an alert right here, and you have a bearish engulfing candle. So the exact same thing here with the channel and the range. So here you can have a sort of a swing trade where, yeah, it's 1, 2, 3, 4, about 4 or 5 days here to profit. It's 1.5 hour trade, not really the highest risk to reward, but usually what I do when I'm swing trading is I look for levels on the weekly and daily, and then I go into the 4 hour to find my entry. So let's see if we can find a better entry here based on the 4 hour. Basically, we want a clear rejection here. So now you see in the 4 hour we have an uptrend. Can we get a break of this uptrend to the downside? Well, that is certainly a very strong move to the downside. That would be a good signal. So not to go into exact details of exactly how to enter this trade, the trade would probably look something like this, and still not really a high risk to reward trade, but as you can see, it works out quite nicely. So you see prices, they go above the upper boundary of that channel, and it goes below. See if we can find an entry here on the 4 hour. So we probably, I mean, there's a few entries you could have entered here, been stopped out, and then you have another one right here, stops below these wicks. It's a pretty decent risk to reward on this one, 4.5, and it goes straight up to TP right here. And then we can see if we get another extreme deviation. And you can also see here, interestingly enough, that this is also a range, right? This is also, could also be viewed as a range. Same thing here, right? But now that deviation above the range, it could be a signal to take it down to the mean of this range. So the channel hasn't really developed yet. But if we see price hits resistance, support, resistance, and there you go. You see a big move to the upside, right? And now the channel is quite obvious. So let's see if we can get a signal on the 4 hour here. And I think what I would like to see here is just a break below this. So kind of like break below this 4 hour range that we have up here. And that would be a good signal for me to exit a position here. So I think that would be a good entry trigger. Stops about that one, then take it all the way down to the mean, a good 4 hour trade, and then it goes straight down to that level. So a good example of how to trade a channel from a swing trading perspective using a mean reversion strategy. Another great way of trading a mean reversion strategy is using this indicator called the Bollinger Bands that you have here on the screen. So Bollinger Bands is sort of a way of measuring the market's volatility. You will see that you have one middle band or middle line here, which is usually a simple moving average, and it's usually the 20 EMA. And I could say that when the volatility is high, the bands get broader. When the volatility is lower, the bands get tighter. The bands get tighter. The whole idea here is based on the fact that these lines above here is created by measuring the standard deviation from the right. So you have the mean or the central price here, and these are not sure exactly how they calculate this, but I think it's 2 times the standard deviation or something like that. But the general idea is very simple. when you get above the upper band, when you hit the upper band, you hit the extreme of the standard deviation from the mean. So what you want to do is you want to be trading from this level down to the mean. Now, a lot of people, they want to trade from that level down to that level, but that's not really what mean reversion is about, because basically then you're trading from one extreme to the other extreme. And you can view it as you have that moving average here, and then you have price kind of fluctuating from one side to the other extreme to the other side, and fluctuating between this moving average. And when you're trading mean reversion, you want to be trading towards the middle of that line. But we're not going to go into the huge detail on how to create a profitable mean reversion strategy. We want to look at this from a swing trading perspective. So mostly I've seen people use this on the lower time frames with good results, but I also know quite a few very successful swing traders who are using this from a swing trading perspective as well. We can see we can find some examples here on Euro USD. So when I started trading, I did play around with the Bollinger Bands. I really did enjoy the Bollinger Bands. You can really create some profitable strategies using Bollinger Bands, but it wasn't really my type of trading, so I'm not really using it anymore. But if I would be using the Bollinger Bands today, what I would be looking for is some sort of, so let's say on the 4 hour here, for example, here's a good example. I would look for a 4 hour candle to open and close, or just to close above the extreme. So in this case here, I would probably look for some confirmation. So in this case, you have a confirmation here with the 4 hour bearish engulfing candle. So what I would do is enter orders on the close of that 4 hour bullish engulfing candle with stops above the high that created the signal, basically the wick of that candle, and then down to the mean, down to the central price. This is a nice 2.6R trade right here. That's what I would be doing from a swing trading perspective. Let's see if we have any other examples here. And you know, when we talk about swing trading, it's basically all about time frames. What time frame are you choosing? And we can go to the 5 minute here and see the chart looks exactly the same, the Bollinger Bands looks exactly the same. It's all about having that perspective. So with swing trading, as compared to day trading or low time frame trading with the Bollinger Bands and mean reversion, it's important to have that patience that we talked about, right? You need to have that patience, because if you see price getting above this level, okay, on the close of that 4 hour candle, and then you see price continuing higher, you need to be very patient, because right here, so right here, the candle gets above the high of the extreme to the upside here, and this candle might close 1 hour later, and then you have 4 hours here, 4 hours here, and 4 hours here, and then 4 hours on that close. So you have like 8, 9, 10, 11, 12, about 16, maybe 17 hours from, so maybe 17 hours from price actually breaking above that level till you have that confirmation. Now, usually patience gets rewarded. You see here that you waited for that candle close and then down to the mean. That's a nice 2R trade right there. So you need to be very, very patient with swing trading. It doesn't really matter what system you're swing trading, you need to be very patient, because you're usually waiting for those high time frame candle closes. Alright guys, this concludes the course on understanding swing trading. But before we end, I want to go through some conclusions and make a summary. So let's begin by looking at the first chapter, which is understanding swing trading. So here we have two main things that connect all types of swing trading strategies and different types of swing traders. It's important that you have a long-term thinking when you go into swing trading, and you need to have a high level of patience. It's all about catching the bigger swings in the markets, and even though you can combine different time frames, your main analysis and your main plans should be done on the higher time frames. This means that you will have more time to react, and you don't have to spend as much time behind the screens, but it does require a very high level of patience. And if you remember when I talked about the swing trader's mindset, I mentioned not only patience, but also long-term perspective, adaptability, and emotional resilience. But if there's one thing you're going to take away from this, it's again the importance of patience. And I know I keep repeating this, but if you are not a patient person, then swing trading is simply not for you. It's all about moving slow, having the long-term thinking, and being patient and waiting for those plans to get activated. And then we moved on to the fundamentals of swing trading. And here we focus on time frames and holding periods. Now, usually you will see swing traders, like I mentioned before, focus on the higher time frames, usually the 4-hour, daily, or even higher. But it's important to remember here that you don't have to execute the trades on the higher time frames. You're not bound to one time frame. Usually what swing traders do is they base their planning with long-term thinking in mind on the higher time frames. But when the higher time frames align and you get the signal to go short or go long, you can easily go into lower time frames and execute the trade there. And the same thing goes for holding periods. Usually a swing trader holds a position open for several days or even weeks. But this has more to do with the planning of things. Again, you're going to have that long-term thinking, and you might say, I plan to have this trade open for a couple of days or even a couple of weeks, but I'm open to the idea that anything can happen. So what you should be doing is you should plan for longer, but be ready to exit earlier if the market gives you the signs to do so. And then after the fundamentals of swing trading, we went in to look at some examples of swing trading setups. Now, like I mentioned when going through the ideas, it's not about giving you profitable trading strategies, but I wanted to show you different types of trading from a swing trading perspective. And this is to give you an idea of what the different types of trading, whether you are a trend trader, range trading, or if you're a mean reversion trader, how this would actually look from a swing trading perspective. And now this might be quite obvious, but like I mentioned before, it's all about time frames and planning. So it doesn't really matter what type of trader you are, what type of system you're trading. It doesn't really matter if you're trading a range or a trend. When you're swing trading, the idea is you need to be able to take a step back, zoom out, and have that overview of the market and look at the higher time frame levels and try to see and predict what price action would look like moving through these high time frame levels. And it's very different from intraday trading and scalping on the lower time frames because you're taking fewer decisions, you don't really have to act quickly. And really what it's all about is making sure that you have the right personality and mindset for swing trading. And speaking of mindset, to conclude this course on swing trading, I want to take a few minutes and talk about the importance of having the right mindset. When it comes to profitable trading, one of the most important things to understand is who you are from a psychological perspective and also understand what life situation you are in. This is important because if you are going to learn how to trade while keeping a full-time job on the side and on that job you don't have access to a computer or a phone, obviously you're not going to be able to trade in the London section, the London Open session, for example, if you're working during that time. So if you're not going to be able to be a day trader or an intraday trader in that sense, you have to stick with a system that really does work best for you. For most people, this is a swing trading system. I would say that when you start trading and you start learning how to trade, starting from a swing trading perspective is what I would recommend for most people. But it also comes down to mindset. If you are the type of person that just hates waiting around, you want action right away, you're very impatient, and you don't want to be able, you want to be able to get in and out of positions quickly. And you feel like it's just very, very difficult for you to wait and then stay in the position for longer, well then swing trading might not just be for you. It's very important that you make up a psychological profile of yourself. Really ask yourself, yes, I might be disciplined, but am I patient? And if you're not patient, then choosing to become a low time frame trader during the sessions when you're actually able or very actually available might work better for you. So before you choose which type of trading style you should go with, ask yourself two questions. Am I highly patient, and do I have a long-term perspective? If you know yourself well, and you know that you're not the type of person with a high level of patience, and you don't think having a long-term perspective in trading makes sense to you, it doesn't really feel right. Then you are most likely better off finding a trading style that better suits your personality. And that might be scalping or intraday trading. All right, guys, I would like to thank you all for joining me on this exciting journey into the world of trading and into the world of swing trading. After this course, you should now have a good understanding of what swing trading is and have a better understanding of if it's the right type of trading style for you. Again, thanks for watching, everyone. Take care.